So the big question is this: how are investors like us, who don't have a PhD in finance or millions to start investing, how do we grow our bank accounts to build real savings and retirements and yet still have the time to do what we really love? That is the question, and this podcast will give you the answer.
Awesome, guys! I'm super excited. Today I'm talking about something I think a lot when I was starting day trading and trading 9 to noon, and that was market prediction. And also, there was this guy I was talking to, and he was talking about stock market. It was awesome. I told him a little bit about what I do, trade 9 to noon, how much I love it, active stock market, swing trading, everything. I just love it. It's super awesome stuff. And then, with most people that I meet initially, they always kind of say the same thing. They're like, well, don't studies prove that active stock market management is actually bad, ? And don't active stock managers actually make less than the market? And that's kind of something I want to talk about today. And also, it's just sort of paying that market tuition so that you can start learning, about technical analysis, about those 2 magic words that have changed my life. So with that said, let's get started right into it. I remember when I first started swing trading stocks, that's when, or long-term investing too, but mostly I was getting into swing trading. And I was learning about all these amazing technical indicators, these technical patterns. And when I would trade these, it was like, whoa, dude, you look at the pattern, you learn the pattern, and then something really, really weird happened was, thank you. You would see a stock, the stock would go and it would fit the pattern, and then after the stock fit the pattern, instead of just doing whatever the market says it does and doing random stuff, it would actually follow the pattern. So, if you could find the patterns, all of a sudden, you're able to find these outperforming stocks, these stocks where you can actually, accurately and repetitively predict their price movements, which is super cool. Because when you do that, all of a sudden you turn the stock market game into, a consistent, the probability, the math is in your favor. You can win, right? That's a lot of people say with a lot of investing, which is at least outside of indices, right? So when people talk about active stock managers that can't beat the market, which is totally true, right? Those are a little bit different from 9 to noon trading or swing trading on an individual basis, because most of the people in those situations, hey, you're actually looking at these managers, right? These money managers that have control over millions and millions, sometimes billions of dollars, right? Trillions of dollars. I mean, it's insane. And what they do is they take masses and masses of people's money, and then they try to find a solid, a couple of stocks to invest in, and they use diversified funds, obviously, just like we talk about in 9 to noon. But the point with it is that it's their entire job to manage hundreds, thousands, millions of people's money, millions of people's portfolios, a great part of a lot of their portfolio. So because of that, they have these huge position sizes, hundreds and hundreds of millions of dollars in any given stock, which is very, very different from, most individual investing with 9 to noon, because, when you're trading for yourself at the beginning, for most, it's usually you're not going to have $100 million positions, and your portfolio is worth billions and billions of dollars, right? Instead, you're going to have options, much more options with investment. You'll be able to enter positions a little bit more clearly, right? Like I talked about in chapter 36 in the book about brokers, they have these things called dark pools, and without getting too much into the book, I'll give you what I can give you. I mean, here's the deal, right? You have these really, really big financial institutions, and the entire goal is for them to make these huge trades, right? So what they do, if they did it in the public market, right? If I was going to buy a bajillion shares of GE, right? Price is determined by supply and demand. So these guys that want to buy these huge amounts of shares, they're creating an entire marketplace of supply and demand. And if they put a huge order in like that, there's a bunch of demand that's going to increase the stock price. So they're going to increase the average share of a given GE stock. Because there's so much demand that's coming solely from that individual entity creates this insane supply of demand for security, and because of that, there's a ridiculous jump in the price, right? If I try to buy 1 million shares of something, it's probably going to go up 10%, give or take, if on average it's only 1,000 shares traded a day. Now, on something like GE, a little more liquid, it might take a bigger position to do that. It might take, a couple hundred, it might take a couple, a lot more to get there. Oof, but the principle is still there.
Want more stock market secrets? If so, go get your free copy of my best-selling book, 9 to noon. You can get your free copy plus $11,176 of unannounced bonuses completely for free at 9tanoonsecrets.com. Inside 9 to Noon, you'll find the top 38 secrets we use to double our portfolios every 2 years and make upwards of 10% per trade daily.